Hey guys, how's it going? It's Andy from MagooInvesting. Happy Thursday. In today's episode of Robinhood Top Stocks, we're going to be talking about Spotify, ticker symbol SPOT. And so Spotify is one of my favorite companies out there. And it was up until recently that I figured out that they actually have a stock. And so I have been a part of Spotify since 2011. I've been a paying member since 2015. And so it's been a massive part of my life. And so with the end of the year happening recently, I'm sure a lot of people saw the Spotify Rewind stuff that people were posting on social media talking about. It basically goes through your year on Spotify and tells you what you listen to the most and the overall time that you spent listening to music or podcasts. And so I think this is a really interesting thing just to kind of go back and see how your year was. And so when I talk about Spotify as being a company I love, I'm just going to throw up the statistics that I've had since 2015, and I think it'll show that I use Spotify a decent amount. And so before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional. Someone can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out. We're getting really close to 1,000 subscribers, and thank you guys so much for that. So far at this point, Spotify is the largest music streaming website out there. And so it's been around since I think it was 2008 or so. And it became a publicly traded company in early 2018, so it hasn't been out for that long. And so I've made videos talking about why I don't like taking positions in IPOs, and basically the TLDR for that is when an IPO comes out, it's a lot of speculation on how much the company is worth. And so for someone like myself that really enjoys technical analysis, when the stock first comes out, there's not a lot of price action for you to look at. And so Spotify, now that it's been out for almost 2 years now, there's enough data on the charts where you can look at it and get a general understanding of how investors value Spotify overall. And so it has not been the best performing stock overall. It IPO'd, it pushed up, and then it fell heavily when the market fell of winter of 2018. Man, that was a long time ago. And so it's since recovered. And so it's had some nice moves up. However, it's not been doing an incredible job at getting returns compared to some of the other tech companies out there. And so in this video, I'm going to be breaking down the fundamentals and just Spotify as a whole. And then we're going to be hopping onto the computer. I'm going to show you what I see on the charts, and then we're going to compare my opinion on Spotify to the analysts for the 12-month outlook for Spotify. So as I mentioned, Spotify is the largest music streaming site out there. And so their main competitor at this point is Pandora and Apple Music. And so I don't really think of Pandora as being a direct competitor because they don't do the exact same thing, whereas Apple Music is a direct competitor with Spotify. And so when you compare the two, there's a lot to like about Spotify. As I mentioned, it's the largest music streaming site out there. They have more flexibility in their payment options, as they have a free tier where they play ads and the paid tier. And so comparing the two, they both cost the same amount. The difference between Spotify currently and Apple Music is the fact that Spotify in 2018 partnered with Hulu. And so if you're a premium member for Spotify, you get Hulu for free. And so being a student, which also gives you a discount, that was something that was very attractive. And so both of them have student discounts, but the fact that Spotify had Hulu bundled in for free was a no-brainer for any college student, in my opinion. Music selection-wise, they both have around the same amount of songs on there. I believe it's close to 50 million songs, and so you can't really compare them in that aspect. One of the stats that I really liked for Spotify is that I believe it's around 40% of premium users use Spotify on a daily basis. And so I couldn't find any information about Apple Music, but the fact that so many people are using this platform, I think it's awesome to see that when you're looking at how well respected a company is overall. So going into fundamentals, I like to start by looking at the revenue overall. And so when I put that on the screen right now, you can see that it's been steadily increasing since its IPO in 2018. And so those are all great signs. One of the things that I don't really like about the company overall is their earnings per share. When they first IPO'd in 2018, they were burning through money. And so I don't exactly know why they're spending so much money. I believe it has to do with the paying of artists to make sure that they're allowed to be licensing their music on Spotify. But from when they first IPO'd, they lost a lot of money. Those poor earnings probably helped push the stock pretty low when the market fell overall in winter of 2018. But since then, earnings per share is steadily increased to the point where it's pretty much hovering around even. And so it's not super attractive. Obviously, when you're looking at earnings per share, you want to see a profitable company. However, when you see the progress that they've made in just the 2 years since it's IPO'd, I think of that as a positive. It makes sense that as revenue increases, the total amount of debt would decrease. And so when I put up how much debt they had at the beginning when they IPO'd compared to what they have now, there's still a hefty amount of debt. However, they've started making making progress and knocking down that debt. And so for overall, it's not a red flag for me with how much debt that they have, but it's kind of something that it's one of the warning flags that I see. And so with increasing revenue, which is great, the fact that they're starting to go positive with earnings per share is all fantastic news, but the amount of debt that they have currently is kind of the one thing that would be holding me back overall. However, when I put up debt to equity ratio, which is one of my favorite fundamentals to look at, it takes into account how much equity they have compared to the debt. And so when I show that the debt has been decreasing, but is still pretty substantial, when I put the debt to equity ratio, you can see how much progress they've made since their IPO. And so debt to equity is a great symbol to me of how much money they're bringing in and if they're in danger of burning through too much cash. And when I see how low their debt to equity ratio is compared to the history of their stock, I think that looks solid overall. And so now that I've talked about the fundamentals about Spotify, let's hop on the computer and take a look at the charts and then finally see what the analysts have to say about Spotify. Ticker symbol SPOT. All right, so here we are on Robinhood today. It feels like we haven't been on here a while because most of the companies that I've talked about kind of recently have all kind of been dumpster fires, and it's not really worth taking a look at the charts when the stock has fallen so far in the past couple years. But today we're going to be looking at Spotify. It has a 59% buy rating with 17,000 people owning the stock on Robinhood. No dividend. We come down here. Here's the news that it got downgraded by some analysts and the stock fell 2% yesterday. But overall, they have it as a 59% buy, 34% hold, and then a 7% sell. And so here's the earnings. Here is their first quarter, the first time they posted earnings, and they missed the mark pretty bad. But since then, they've started to do much better, and they're getting close to breaking even overall. As we go take a look at the chart, this is the entire chart for Spotify. As I mentioned, they IPO'd in early 2018. So it IPO'd, fell a little bit, and steadily climbed. And then around the time that the market just started falling in 2018, Spotify got hit pretty hard. They went from 200 down almost all the way to 100. And since then, they've kind of been going horizontal. And so on the chart already, I've kind of zoned out some important areas that I wanted to talk about. The first one, I like mapping the 52-week high just because that often, or the all-time high, because that often acts as a resistance the next time the stock tries to break that. And then down here, this is the one that I thought was really interesting. And so it doesn't look like that solid of a support just based off of it touches it here once, twice, and then 3 times. But the reason I like marking these is because of this gap up right here. And so with a gap up, it means that news pushes the stock up in early morning or after hours. And so the stock chart doesn't update until the stock market opens. And so it gaps up. And in my experience, gap fills happen pretty much all the time. And so anytime that a stock gaps up like this, I will expect it to come down and close the gap. And what I mean by that is it went from 120 to 130. And so on the chart, there's just a blank spot right here where it didn't trade in this area. And so a gap fill would mean that the stock comes back down and will close this gap and trade back down to 120. And so do I think that's going to happen right now? Probably not. But I like having these charted out so that I can come back a couple months from now and kind of look to see if maybe the stock has fallen a little bit and it's sitting around this 135 area. And if I saw that, I'd think, oh, maybe it'll fall further down to this 120. And so in my experience, those have been good things to map. I mapped out this important zone right here. It's been treated as a support from this side, a resistance from the bottom side. And then recently the news with the downgrade from the analysts have brought it back into that zone. And so when I go to the 1 hour or the 4 hour, 180 day, you can kind of see that the stock has had some problems moving around this zone. And so the stock kind of pushed up and came to recent highs, and then the news brought it right back down and it bounced out of here. And so when I see that, when I see a level like this being held so frequently, this seems like a decent spot to take a position for a swing trade. And that's just my opinion. I don't think this is a great swing trade overall, but when I see something like that where news pushes it down into a zone, the zone holds, and then it pushes right back out the next day, it looks solid overall. So overall, my price target for Spotify, based on the charts, would be to the all-time high of $200, and then my lower end of the range for this year would be filling the gap and coming down to 120. So not a lot of room to go on the upside, in my opinion, to take a position in here based off the risk. I think more than likely it'll come back down for a little bit, and then I think a realistic price target will be maybe the 175. But overall, I think long term it looks good, but I just don't see enough on the charts and the fundamentals to warrant taking a position. But with that being said, let's see what the professionals have to say We're going to start off on CNN Money as always, up 2% year to date. And as we come down here, you can see that it has a very wide range for the price forecast, with the upper end being $207 and the low end being $90. And so when we talk about taking reliable long-term positions, this is not really the type of stuff you want to see. If you're looking for something that's very reliable, think something like a Microsoft or an Apple. When you look at those on CNN Money, they have it as the lower end is pretty close to even. And so when we're trying to take safe positions, we want something that's going to most likely be making money a year from now or into the future. And so when it seems like a flip of a coin may not be a great idea. And so I always like looking at different analysts overall, just kind of have a general understanding of what the market thinks of the company you're looking at. Because for something like Spotify, I really enjoy the company. But if I look on here and people do not feel the same way, I'm a small fish when it comes to the money I'm trading with, and I don't affect the market at all. But for someone that does affect the market, I kind of want to know what they're thinking. So when I come over to Yahoo Finance, they have it as overvalued down in the short term, up in the medium and long term. I kind of agree with them on this one. Volatility is a little high right now for the stock just based off of the recent news about them being downgraded, but I think the long-term outlook on the company is good. Their one-year price target is 166, which is not super high, so it's definitely on the conservative end, but I kind of agree with them on they're kind of down on the short term, up in the medium and long term, and I agree with that overall. All right, so overall, what do I think about Spotify as a potential short or long-term investment? And overall, I think I'm a little biased, but I love Spotify for any type of investment. And so right now, it's sitting pretty far away from its all-time high, which I really enjoy. For when I take a position in a stock, I want to see what the potential upside can be. And so when you're taking a position with a stock that's near an all-time high or a 52-week high, you don't have as much prior knowledge about the potential heights that a stock can go. And so I've had some people talk about how when I say that a stock reaches the 52-week high, it's kind of like a negative for me. And that's kind of the main reason why. As a technical analysis trader, I like seeing where the stock has gone in the past, because if it's gone there once, it's possible for it to go there again. And so anytime that you have a stock that's at a 52-week high or an all-time high, it's kind of speculation on how far you think it can go up. But when you have evidence of, oh, hey, Spotify's been at $200 before, they can do it again. And so I think it's got a lot of upside. I love the company overall. I love the fundamentals. They're making a lot of money. They're pretty close to getting profitable. And as they're the number one streaming service out there, I don't think there's a lot of negative things you can say about them. It'll be really curious to see what their next earnings look like. I want to see them stay positive on their earnings for a while before I would be considering taking a position. Currently, I don't think that Spotify is like the best place to put your money overall. I love the company. I think the charts look pretty good, but there's nothing on there that I look at it and I go, yes, this is what I want to put my money into. Something like when I looked at Snapchat, the fundamentals and the just overall how the company works just blew my mind at how impressive it was. And so I took a position in that. Spotify, I know that it's the largest streaming service. I think that they're better at what they do than Apple, but when I look at the fundamentals, nothing's just jumping out to me as being, oh man, I should take a position in this right now. But I love the company overall, and if someone took a position in Spotify, I wouldn't blame them for it. Currently, I don't think it's the best deal out there, but I love Spotify, and I think that the charts look pretty decent as well. So let me know what you think about Spotify overall. Do you like the company? Do you like the charts at all? And if there's a video or just a company you'd like me to go over in a future episode, please leave it in the comment section down below. Thanks for watching this episode of Robinhood Top Stocks, and I'll see you in the next video.